what are the risks of investing in this fund, and what is Blackstone saying?
Hi, good morning. I think it's fair to say this is a high risk but a high return fund. So I think the head of credit at Blackstone mentioned 12% in terms of returns for the loans, and for investors that means about 8% annualized returns. And you're not getting those kind of returns in corporate debt or corporate loans unless you go into basically speculative grade or unrated securities. So the risks are we have very high rates across the world. Also, this fund is based in the States and the lending it does. So the big concern is defaults. Will we see a wave of defaults? Will that undercut loans and credit like these? Blackstone says they've diversified. They're in sectors that are hopefully less exposed to such defaults. They're lending to larger companies, and these loans are secured. So that's their point, that they think that they've built the fund that are resilient, and we shall have to see how the credit defaults in the next 12 to 18 months across the sector work out.
Blackstone undertakes direct lending to firms in the US, and funding is based on that. Did they say anything about doing any more out of Asia or even in the Japanese market?
So this fund is in U.S. loans, but obviously Blackstone is huge. We have that story today on a trillion in assets, and they're also huge in private equity. So they are sort of piggybacking on the back of their private equity deals in part. So their credit and insurance assets, as they call them, are almost $300 billion. So they see, they've said that as they go into these markets across the region, they intend to extend the lending. But in Japan, rates are still very low, still minus interest rates here. So, but they do see an opportunity in the future.